Welcome to Momentum Monday. Today is May 8, 2020. Happy Mother's Day to all the ladies watching. Howard, have you called your mom yet?
Called my mom from the top. I went on a hike, called her from the top because, I didn't want to, she talks so loud, it bugs the neighbors. So I had to go to a quiet spot at the top of the mountain. And she's been quarantined for like 6 weeks, making my life a little easier, not stressing me out in Toronto. And luckily, my mom's group of Jewish stay at home, they've honored the not one, knock on wood, knock on apple, not one COVID. My mom has got hundreds of friends over 75.
Mm-hmm.
So, and she knows that she just wakes up to read the obituaries. That's basically like you and I look at relative strength and charts. She looks at the obituary. Did you know I have to end up texting so many people that I knew when I was 11 to say condolences about their parents because my mom alerts me. So it's better than Facebook. She should run a Facebook of death.
Yeah.
Yeah, I got quite the alert. Did you know who died, Howard?
Yeah, that's a good opening, right?
How's your quarantine going? And you see my logo, right? I just got about 100 of these.
Start selling those, yeah, on your website, right?
They're not it's not my logo. I just
make your own. Yeah, the quarantine here is going fine. I'm kind of noticing that people are just not taking it too seriously anymore, just starting to socialize. I don't
Doesn't
think
mean you shouldn't. Protect yourself.
Yeah. All right, let's go to the markets. I mean, that's why we're here.
Oh, do we do a market show? I thought we were just talking about life in general.
Yes, we do both.
Okay.
All right, look at that chart. It's just incredible.
Look at the monthly. Go to the monthly. It's like nothing happened.
Well, looks the same on a daily, basically. But yes, there was a pullback, not even to the rising.
What does it matter? Look at that. Crazy.
Okay, this is the 50 month moving average, or not sure what it is. Here, let's see. Yeah.
It wasn't a bear market, put it that way.
Yeah. I mean, the Nasdaq 100 was the only one who didn't go below that 50 months moving average. So yes, ever since making that new high here, it never closed below it. So you can consider it a bull market. And last week was just, I mean, the strength was incredible, especially in the Nasdaq 100. It had 4 days in a row, it would gap up about 1%. And granted, it would close where it opens, but on Friday, of course, it just did even better than that. I mean, incredible strength. And if you think about it, right now, it's only 5% below its all-time highs.
Crazy.
And with this pace of recovering, I mean, we could be there by next Friday. Not saying it'll happen, but anything's possible. And it's not just the Nasdaq 100. I mean, towards the end of the week, we saw some significant high volume moves in other sectors, in finance, energy, retail, basically anything else that has been lagging also started to move on Thursday, Friday. And last week, I mean, we saw some ginormous gaps after earnings reports. And those earnings reports were not anything spectacular.
No, they just weren't disaster.
The market reaction was just something that we haven't seen in a very long time. I mean, there's some epic short squeezes, so many of them. Billion-dollar companies just went up 30-40% in a day on their earnings report. Anything basically in related to enterprise software just was super hot.
Yeah, highly shorted. I mean, what happened is, I think, Ivan, what happened is a lot of very smart, and I use smart in quotations because smart does not mean great investor in stocks anymore. The market is completely a beast that is very for about 2 weeks, it was tied to the economy in mid-March, early March. And now it's become unhinged. And unhinged is a good word because of the money printing. So Yeah, look at even Mercado Libre, which was kind of like the strong dollar was going to hurt it,
Yeah.
holding it back, and now you have an all-time. Oh, Fastly, another one. But hang on, go back. I have in a couple. It's just like, it's just, it's just very interesting how if you got too negative in March, right? It was easy to get too negative in March. So what happens is I think you have this double whammy of people, basically every chart shows this. If we look at the S&P, I think the S&P will show it better. Ivan, just pull up the, you really did have a bear market move, and we're not out of the bear market in the S&P because 300 of those companies are massively affected. What's skewing the S&P, and you see it in the QQQ even more, are the 5 or 6 great FANG stocks. And there was a chart somewhere, Ivan, I think it was Greg Reben on StockTwits that showed that the group of FANGs are well through all-time highs. The group of them: Facebook, Apple, Netflix, Google, Amazon, Microsoft. So if you look at them,
I don't think any of them is at all-time highs. Just Amazon hit all-time highs.
Right, but the group of FANG is at all-time highs. Maybe Google's holding it back. Netflix hit all-time highs a couple of weeks ago. It's pulled back.
Just Amazon and Netflix, basically. The rest are just a little bit behind.
No, so I mean, even though the Nasdaq isn't quite at all-time highs, the FANG stocks are. And I think what you could have if we pull up the Nasdaq, I don't know how to pull it up. I think you're going to have a run at 10K. I think it could be a vicious pullback here at any moment, obviously, because stocks just. But I really do feel that by the time we do another, by the time CNBC, the next CNBC specials will be Nasdaq 10,000, not market in turmoil. That is my bet, that at some point in the next, over the summer, before we get more panic, there will be a great chance of the Nasdaq getting to 10,000. We're going to need a little more participation, but these FANG stocks, this Facebook acquisition or buy, Ivan, into India is really fueling a lot of excitement, especially for Facebook. I mean, it looked tired for months, and if not a year or two. And this bold move into India is being loved. You can kind of see at 180 when they made that move, an India acquisition, Jia. Shopify was getting all the love, and now you can see the stock acting much more like an e-commerce stock in the last 3 weeks since they did that deal. So I think what you have, Ivan, if we go back to the S&P, you can see that people panicked for good reason. Media clobbed on, we all did. And then mid-March, I started doing this panic with friends saying, people, it's too late to panic. And I think what you have now, Ivan, is it becomes an easy, for the people that missed this rally, it's easy, and they just can't get their heads around valuations and the fact that the Nasdaq's back at all-time high and unemployment. They're starting to short the market. And I've tried a few shorts myself, but I've been in this long bullish mode that has helped me at least not be short. I've given away some money on some hedges, but like, screw it. It's going to be tough. It's not going to be a straight line. We've got the straight line up so far. I'd be shocked if we didn't chop for through the summer, now that the stocks have run through earnings. But I don't know. I mean, so that's why I think we've had this V in so many Nasdaq companies. You've front run 2 or 3 years of biotech healthcare rushing through the pipeline. You've rushed 3 to 5 years of digital transformation in the last quarter or 6 months, and that's going to be the story. I think Nasdaq 10K is going to be the story, not markets in turmoil. And I think that will be a good time to sell. I think I can't be sure when CNBC is going to pick up on this Nasdaq 10,000 story, but I'm shocked if it doesn't. If the Nasdaq stays strong for another 2-3 weeks, and you know, the economy opens up with not too many problems. There's going to be problems because of people just aren't going to take advantage of the open economy. But if I look at that volume on the down and on the up, Ivan, there is a big transformation of a big wealth transfer, a big switching of shares. And you saw with Warren Buffett, he just looks like he was run over by a truck. I know he's an old man, but he looks like he was run over by a truck.
Well, I think that correction and the recovery, they just happen too quickly. And all of the old timers, they're used to.
Well, they're used to their phone ringing, right? He's like he said, I wasn't getting phone calls. You know, the government just
exactly, because I mean, no one expected it to happen so quickly. Both the correction and the recovery, because the typical recession and bear market lasts at least 9 months, sometimes 2 years if it's a big one, and everyone expected this one to be a big one, and no one knows if it's over.
Well, you can also argue the Nasdaq, even though it went down 20%, wasn't in a bear market.
Oh yeah, they didn't even test their lows from December 2018, doing far above.
I'm looking at the Nasdaq here; it was still, you know, VIX 90, and we were still above the. It was so confusing. I get why people are negative. I'm not knocking people that were negative. They should have been concerned, but VIX 90 was a point where either the system was going to break, and it didn't. And so I don't think people understand that that is bullish. The fact that the markets didn't break, forgetting the policy and forgetting the death for a moment and forgetting the tragedy, the markets didn't break. And what makes networks stronger are these panics, right? So the market's stronger than ever. I'm not saying the fundamentals are stronger. I'm not saying there's not more death and destruction coming, but you're not going to see that moment again. And I'm not going to bet money that we wouldn't see VIX 50 or VIX 60, but I would bet money that we won't see VIX 90. And if we do, all bets are off at that point. But I think we'll have plenty of warnings before that happens. So now I walk through what you're doing. I mean, I know what I'm doing. Walk through what you're doing.
So, I mean, one of the main things they do is I pay attention to market sentiment. And to me, the most practical way to look at market sentiment is to see how the market is reacting to earnings reports.
Okay.
And I noticed that in the past 2-3 weeks, there's been a notable shift. You know, we started with the big one, like Facebook, gapping slightly and then getting faded initially. Amazon had a big pre-earnings move and then it gapped down. The same with Netflix. And all of a sudden, last week, we start to see, as you mentioned earlier, companies reporting just ordinary reports and then just gapping up and going 20-30%. Even we saw companies like
well, I would say Twilio, which I was long and
oh yeah, Twilio as well, but even companies that are cutting guidance. Typically in a normal market, when you cut guidance, you go down, especially if you're a high momentum stock, you go down 20%. I mean, that company, Alteryx, it was barely down and it has already recovered. So this is a big tell that in the past couple of weeks, we went from getting afraid from each 1% down move and just running for the hills because thinking, you know, this is it, the next leg lower is starting. Right now, we are seeing those little gap downs and dips as buying opportunities. So there's been a big sentiment shift, and right now it's bullish. And as we know, sentiment doesn't really change that quickly.
Yeah. And I think what could help, what I've tried to offer people who follow me is that you can still keep with the type of stocks that are moving, you can still keep a very high cash position and keep up with the markets if you own the right beta stocks, right? And we're seeing that with the Nasdaq, with the Twilios and the Zooms. You don't have to be 100% invested to capture beta, and that's what you know.
Yeah.
And I've been trying to explain that to people. I'm 54 years old. I believe the market is now going to go much higher. I don't have a fundamental grasp of it. Who could? You know, $6 trillion has been printed. More money is going to be printed. There's sloppy money everywhere. There's death in the street. There's economy's terrible. We've changed our habits. I'm eating at home. Yada, yada, yada. I don't get to see Ivan. I don't get to see my friends. I don't do the thing. I'm wearing a mask. my life has never been better. I know, like, yeah, so I wear a mask and I just went to the grocery store with gloves. Big fucking deal. I want to live. The shelves are stocked. The social life has changed. But there's trends. A lot of it doesn't make sense, and you don't have to play where it doesn't make sense. But a lot of it does make sense. And you could be 50, 40, 60% long and really outperform the markets here because of the volatility being so high. Even at 30, the volatility is still very high. So I think people need to understand that. They can still, and being short in a high vol market is just very risky. Especially after the playbook just happened, right? Like everybody thinks the same thing will happen again, and we're just going to go straight back to VIX, 70 or 80. And so I've been trying to tell people is like, one thing to not get long, but it's another thing to just get short into this Fed number. Famous last words will probably roll over tomorrow and go down, but that's always the risk of me, trying to read the markets. I'll give you another example. ECPG. It's not a stock I recommend, but my friends, a couple of my LPs ran the company way back and when. Here's this. You can see how this fell out of bed. This is they collect debts. Okay, this is a company that's evil. It's Sunday Night Guy on HBO took them to task, right? I mean, it's not a stock you need to own. But what's that?
Is it John Oliver?
Yeah, John Oliver took a 10 because these guys are the robo guys that just crush you and say collect. They buy debt. So it made sense in a recession if you see that spike down from 40 to what 50. Look at you look at the volatility there in the last month and a half. So the stock economy's doing fine. There was no signals of anything, and of course, look what that stock went to, $14, $15 in a month. That is a move. Okay. Now, what's shocking is not the move down. What's shocking is stock closed at 31, gap up, meaning what's happening is people are saving money and paying down their debts. You can have all the noise in the world that you want. But if you look at a stock like this, not to buy or sell, and see that the behavior right now is government's handing out money and people are either trading it, they're not gambling, there's no gambling, so they're investing it, they're saving it, or they are paying off their debts. That's the only reason the stock is bouncing here, is that there's this phenomenon where people want to reduce their debt load. I don't know if that's good or bad long term. America relies on people spending. But anyways, I just thought I'd throw that in because that's not a stock I would normally chat about. But there's some interesting behaviors emerging.
Well, they report tomorrow, so we'll know more tomorrow.
Yeah, well, I can just tell you they're going to say the same thing. I can just tell you that's what they're going to say. I mean, this is. I'd be shocked if they said that wasn't happening. So I think they're going to comment on the fact that people are at home and for whatever reason, grateful to Encore. Obviously, they want people paying down their debt. Anyways, okay, keep going, Ib.
I mean, right now there's so much strength everywhere. We have the biotech index setting up near all-time highs.
Yeah, I own it. This is IBD.
IBD. And there are quite a few setups in individual biotech stocks that are just setting up near multi-year highs, just getting ready for potential breakouts. We have a lot of strength in semiconductors, which for me is the leading sector.
Oh my goodness, all-time highs. Whoa. Yeah.
Almost back to all-time highs before the earnings report, and Intel is looking good. AMD is looking good. And there've been quite a few breakouts in the smaller semiconductors that are just breaking out and just looking strong.
So I'm avoiding that space just because of tariffs and just there's enough good winners, but it's good for the market. I think that's good for the market.
We even see home build, as I said, Thursday, Friday, we're starting to see beats in home builders, in energy, basically in anything. So it's not just software. And granted, last week was just phenomenal for software. We saw such tremendous moves. So take a look at this one, for example. several after
Yeah.
they reported earnings. Look at
Yeah.
this.
Look at
Six
that.
days in
And
a
I would
row.
say Bill, the same thing. I never even heard of Bill.com, but if you look at
Yeah.
BILL,
And
same.
granted, Friday could have been a reversal candle probably for short-term trade.
Some of
but
these are going to, yeah, some of these are going to slow down. I saw it with Cloudflare. You know, they ran into earnings, still great numbers, pulled back into its space. These are more infrastructure. They're growth plays, but there's only so much there's only so fast they can grow. In my opinion, it's more tied to the almost economy at this point. Everybody's onboarding, and they had a great quarter. And some of these quarters are factored in already, obviously, because these companies were kind of. But Fastly just,
right now we're seeing just an epic short squeeze. I mean, many people.
I don't know if it's so much a short squeeze. If I look at Taser, the short squeeze has dropped over the years, and the stock just. It's one of my favorite ideas right now, because in the next wave of the pandemic, and there's going to be another wave, is people will go back to that last playbook and say, which stocks that sell off do I want to own? Not which ones went up, right? People will stay in those stocks, right? So the Zooms, the playbook is on for those. But I think the next wave down, people will look for those stocks that bounce back the fastest. It may not be growth companies per se. And I think that Taser, this is an interesting one because the short interest has dropped, so it probably won't just run away from people. But it's always been a love to short stock, and if we close in this area this month, that's a big breakout, and a company still growing nicely.
Yep.
And obviously in riotal times, we're seeing that's kind of like a hedge.
Yeah, it was a big volume earnings breakout, and typically those continue.
So typically those continue higher. That's what I'm saying. Typically. Good point.
Yes. Yep. And as I said, there's strength everywhere. It's just there's so much liquidity in the system, and that
combined with people short, combined with negative sentiment, you don't have to be a rocket scientist. It's not going to be easy. For some people, it's been easy, so it's been fun to watch some people who get this right. You've managed to go short to long. I don't think it's easy. That's why I'm keeping a high cash position with my stock portfolio. But and I'm trying to avoid the sectors I just don't know. I'm trying to avoid the levered sectors like semiconductors and home builders and energy. I mean, kudos to people who want to make money there, but I want to stick with pure high margin businesses. So everybody's got their style, and I still think the S&P is in serious trouble.
What do you think about SPG, Simon Property?
I've traded it twice. I still have some remaining January 70 calls. Just there's better ideas, right? Like I hope it survives. I think the malls need to survive. It's just going to be like walking through a nuclear zone for a while. But if I look at Lulu and Apple, the best retailers, my wife wants a Apple Watch for Mother's Day. It's hard for me. I would have just normally gone to but I don't know how to order it online for because I don't know. I want it to be a surprise. I don't know what color she wants and bands. And so I think for me, guys like me, it's not fun. I like to go to the mall once in a while to Lulu and Apple store, but they seem to be, if you look at Lulu, Starbucks, it's just defying imagination. Starbucks, they say 50% of their revenue is already transferred over to mobile ordering. So you got to think they're well positioned for the next 20 years. Maybe not a growth stock, but, and then I looked, Disney, again, like I moved out of Disney into like crypto and into Twilio and into Shopify and into Zoom because there's just better ideas. I'm not bearish on Disney. I'm just like, I don't want regular market returns combined with all this gappiness of the economy, and that's what Disney is. And I hope it goes to 140, but I imagine if Disney goes to 140, my portfolio will do a lot better than Disney. So you got to constantly change it up here. So for me, it's biotech, software. Biotech, I'm using the indexes because I don't know the individual stocks that well, and I'm using software. a couple charts, Ivan. I'm going to share my screen for a sec.
Okay, go ahead.
That blew my mind. You can comment on them. Oh, you cannot share while the other participant is sharing. So how do I?
Oh, I can stop sharing and then you share.
Yeah, stop sharing. Let me share my screen here.
All right.
Okay. Let's see. Let's see if you can see this, Ivan. I never do this right.
Yeah.
My screen?
Yeah.
Okay, so big tech eating the world. You can see this?
Yeah.
Okay, look at this. So the Nasdaq composite versus the MSI
Well,
world.
that's a ratio. Okay.
Yeah. So you can just see. I've been saying this QQQ over the spies, for 2-3 months, well, forever. But the last 2-3 months, it's kind of getting silly. So I think people need to have that. I know it sounds fun that these stocks are gapping up 40 or 50, but to put some context into how hard this might be going forward and why we see if the economy starts coming back, we may see a rotation out of the and this will piss off fintech people because this will piss off Nasdaq people because they'll go, well, I don't get it. Why I don't want to own Carnival Cruise Line and the airlines and yada yada yada. But there could be, if the markets are healthy, we could see money come out of tech and move into the old economy. Not sure, but seems unsustainable. This Nasdaq big tech eating the world. I think it's another chart that Callum's a great follow on Sector. He was talking about IPO filings. And you can see here during market tumble, IPO filings have plunged, but you may actually call this a contrarian bullish indicator. And I agree with him. I think what would be interesting to see in the months ahead is if direct listings of all these new consumer companies start happening. I think because of Airbnb kind of having to go raise really expensive debt right now, and some of these companies better than Casper's, but maybe not as good as Airbnb's, are going to do direct listings. If they're a beloved global kind of rising popular consumer brand, get it public, figure out, and do a direct listing like DraftKings did, like Virgin Galactic did. I think you're going to see more consumer brands do direct listings. And so I think that's going to be a trend that comes out of this. And then one other chart I wanted to share is, this is how hard the market is. So for people who want to beat themselves up and understand why it's been very hard to own stocks or get back long, if you look at the overnight gaps, you can see that all the gains, this is going back to 2000. I don't know can you understand this, Ivan? Isn't that crazy?
Yeah. Basically, all the gains happen overnight. But if you sold the Russell 2000, at the end of the day and didn't hold overnight, basically you would have been flat or down for the past 20 years.
Yeah, it just hasn't paid to trade. To catch these gains, you just have to have been in the market. And too hard to try and do it any other way. Is that kind of what it's saying, Ivan?
Well, it just depends on your skills. But
it's been very hard for the day traders, etc. It's been much easier.
What are your thoughts on venture capital funds going public with social capital? I think 2 of their funds basically went public.
Well, they did the SPAC that was Virgin Galactic. They announced 2 more SPACs. So I think, they're very media savvy. They're very financially savvy. They're very tech savvy. Chamath, Adam Bain. They didn't do the DraftKings one. They did the Virgin Galactic. Is that what you're talking about, Ivan?
No. I mean, their funds, their actual venture funds.
I have not seen a venture fund go public. It's never worked out. I don't know.
They're talking about it. Their social capital funds 1, 2. They're actually going public.
Yeah, I don't love that idea. It's been tried. Unless there's like a cash flowing operating business at the center of these things, it's very hard for investors to take it seriously over time, because it's just like buying a motion picture studio. It's a hits-driven business. I don't recommend investors mess around with that stuff. I still believe investors should be really avoiding conglomerates like a Disney at this point, almost like a Nike, but Nike is a fashion technology company. Let me turn off my share screen, Ivan, and you can go back to yours.
Do you want to share something else
No, I'll let you go
okay.
back.
All right.
So I just think people in a COVID world, I think we're going to see, especially as some of my theses, if they come true with direct listings, with consumer brands, smaller IPOs, I think people, especially young people, and I'll show this. Here's my screen, Ivan. Let me show a Robinhood, or let me show StockTwits. This is how young people aren't doing what you and I do with MarketSmith, with StockTwits. Well, no, with TD Ameritrade. And young people aren't having 5 screens or 2 screens, right? This is their screen. They've narrowed the world down into a watch list, right? And definitely on their watch list, if you're a beginner, is not energy and home builders and interest rate sensitive and Carnival Cruise Lines. What's on their one screen is Peloton, Netflix, Apple, Bitcoin, you know what I mean? And so their world is their world is a chat world, talking about the 8 or 20 brands that they appeal to them, and they want to hold companies and trade them as they stay relevant within their, by the way, most of these kids, if you ask them if they wanted to buy Snap, they'd say no, Ivan. So, I mean, they're pretty savvy. They want to buy the Pelotons of the world, and they want to buy the Facebooks of the world. They want to buy growing brands. And we talked about Peloton a couple of weeks ago, and I'm long. I had a great week. But so as the world thinks like this, the biggest disservice a young person can do is to try and do too much, right? They've got an edge. They learned how to invest off their phone. And so the older generation, like Warren Buffett, he looks so confused, is because we may have entered an era coming up where these young people are loyal to 20, 30 brands, a la Warren Buffett, but they're not the same brands that Warren Buffett cared about, because they have sugar, they have, meat, they have travel, they have GDP-driven companies in the portfolio. And I think that is a trend that people should really understand, is that find companies that do one thing well and dominate, and avoid the conglomerate type companies. There's another conglomerate, Booking.com, which you can see, it's a great company, but it's going to take a long time for these conglomerates to come back that are tied to the GDP, Disney, Booking, the travel company, the airlines. But if you are bullish on travel, I think Booking is probably like a leading brand, if you can see over the months. So hopefully that helps. I rambled on today more than you, Ivan. Are you looking at any short ideas or no?
No, I mean, but I'm super nimble. I mean, I can switch basically in a second if I see opportunities. But right now, there are better opportunities on the long side. And every single day, there've been some incredible trading opportunities, and I'm trying to take advantage of them while they last. Because still, the ranges that we see on a daily basis are just giant. So,
are you holding a lot of cash, or are you actually invested a little bit right now?
It's mostly a lot of cash, but I'm just actively trading them, and sometimes I'll swing them for a few days. But I haven't done really too much longer term investing. I'm still in a trading mode. I still don't feel comfortable putting on really long term positions. So it's mostly trading.
Okay. All right. Well, have a great rest of the weekend, and we'll talk this week.
Yeah.